Hey friends, welcome to the Creative Business Mindset. This is your backstage pass to the realities of turning your passion into profit. My name is Joke. I'll be your host. I'm a busy mom of 3, navigating the twists and turns of life and business. You'll get the good, the bad, and the glorious mess of starting afraid, the determination to keep going no matter what. Everyone knows you for that one thing. You know what I'm talking about? It's the thing that comes so naturally to you that you're happy to do it for free. That was me until I made 6 figures in my first year as a home stager. I've made so many mistakes so you don't have to. If this Nigerian girl can do it, you, my friend, can do it too. Let's go. So today, we're talking about the not so sexy side of business, a topic that every entrepreneur, including yours truly, don't want to talk about. The dreaded 7-letter word, numbers. The problem is, it is also what keeps the lights on and the doors open. So your numbers, your cash flow and profitability. And if you're like me with your head buried in the sand, when it comes to these crucial things, then pull up a chair because this episode is what the doctor ordered. And to help us understand this fully, I am sharing my learning process with you with my amazing, brilliant guest, Natalia Zacharin. Natalia is the founder of Zacharin Consulting, a firm that helps business owners increase profitability, reduce taxes, and scale smarter through strategic financial consulting. Natalia, welcome to the podcast.
Thank you for having me. I'm very excited to be here.
Wonderful. So I did a little research on this topic, and according to the Chamber of Commerce, approximately 18% of small businesses fail within the first year. About 50% of small businesses close by their 5th year, and nearly 65% by their 10th year. And the reason is a lack of profitability. This is astounding to me because we all know that the lifeblood of a business is profitability. Yet it's something that we all don't even want to talk about. We don't want to look at the numbers. So help us understand this. How do we make it easy for somebody like me? I'm not naturally wired to look at numbers, but it's your jam. I wanted you to tell a bit of your stories before we go into the numbers and all the nitty-gritty. You worked at other firms before launching Zacharin Consulting in 2019. How did you branch out on your own?
I'm a single mom, middle-aged, and suddenly after being with someone in corporate world for about 6 years, I started seeing the writing on the wall that I had no opportunity not only to grow in the company, but they were actually starting to get rid of my position. I was trying to find other jobs and interviewing, and I wasn't getting anything. And at the time, I had just met my now fiance. I had just met my boyfriend. And we were sitting in a cafe and I was telling him how I just can't even make ends meet and I don't know what I'm going to do. And he said, why don't you start your own business? And I said, well, doing what? And he is a tax person. He's a CPA. And he said, well, what about accounting and bookkeeping? So that kind of just put this little bug in my ear. And I thought, sure, I could do some bookkeeping. I can figure it out and learn it and then do some on the side just as a side gig and make some extra money. And that's kind of how it started. I purchased a class on how to start your own business, like an online class. And it went through the whole, like how to price services, how to find your client, how to find your client avatar, how to reach out to people and you know, what to say to them, what questions to ask. And so I went through this entire class. And when I got to the end where it said, now reach out to all these people and see if you can get them on a sales call, someone responded to my email and I called them and I closed them as a client. I had no idea what I was doing. I'd never done bookkeeping in my life. I didn't have a proposal. I didn't know how to take a credit card. I was a little bit in a panic, but excited at the same time.
That's an awesome story. And so you came from a different background entirely.
Yeah.
that had nothing to do with bookkeeping or accounting, yet you were able to learn enough to now start doing accounting and helping businesses grow. That is fantastic. What would you say to somebody like me who is afraid to look at the numbers? What are
Yeah.
the basics, or somebody starting a new business, the minimum that they need to know when it comes to numbers? What kind of numbers should they know?
Yeah. So first of all, you definitely need to have your own bank account for your business and your own credit cards. It just has to be dedicated. It doesn't have to be a business account, but just dedicated to that business. Because the first challenge that I see is that people are mixing in business and personal, and you have no clarity as to what is your business. So you have to completely separate that out. If your business bank account doesn't have enough money in it, you can transfer money out of your personal account. That's an owner investment, but spend out of your business account for business expenses. So that's like the first thing, like really pull that piece out as if you don't even own it. The second piece, now, because I was learning accounting and bookkeeping, it was phenomenal to be on QuickBooks Online and start seeing the results of what's happening. So finances are not where you are today, it's where you're trending. So if you don't know how to use QuickBooks, that's totally fine because you can hire someone. There are dozens and dozens of accountants out. There's literally an accountant on every street corner. QuickBooks itself is really inexpensive, and you can buy like the lowest version, which is like $35 a month on QuickBooks Online. That's it. It's just $35 a month. Have someone help you set it up. There are even YouTube videos on how to do it. But if you're not a numbers person, that's a great thing to outsource and find someone that could do it for you. So how do you read your numbers? That's something that someone can help you do if you can't do it yourself. But it's basically all of the information that comes in from any of your accounts will be either revenue, like income coming in, items that you're selling, and then all of your expenses going out and what's left over. And a lot of people think that what's in their bank account is telling them what money they're making, and it's not. It's a different number. So you want to make sure you have enough money in your bank account, and then you also want to make sure you're profitable. And those two things, they're related, but they're not the same thing. So that's why having a QuickBooks account or some kind of accounting software, having a profit and loss and a balance sheet is so important. I know that sounds like a lot of mumbo jumbo, but if you're looking at your profit and loss from month to month, you can start seeing things such as when that first milestone, when did I become profitable? Or what do I need to do to become profitable? Like how much am I spending every single month? And what's that number that I need to reach to make a profit? So like maybe your expenses are really low. It's only 3,000. So you know you need to make 3,000 to break even. And then it just goes from there. And that's how I would start if I was anybody else, is just start with some kind of accounting software and break everything down.
I use QuickBooks. When you start any new business, we have more time than money. So I was trying to be everything, to read my own numbers, and I did some sort of, I paid an accountant to learn what to do. And then I realized once I learned what to do, I didn't want to do it. And I was not qualified to do it. So I ended up just handing that over to someone else. But I want to go back to what you said about you make money, your revenue comes in, and you spend money on your everyday expenses for your business. And what is left over, you said, what is in your bank account is not the same as your profit. I would like you to explain that a little more because I don't fully understand that.
Sure. So there are certain transactions that are not considered part of your profit and loss. They're not an expense. So for instance, if you have loans, so if you buy equipment and you're paying off a loan, the interest is something that's going to be on the profit and loss, but the loan principal payment is not. So that's not going to be captured on the profit and loss. Also, if anybody owes you money coming in, that's actually not revenue. Or if you're putting money in from your personal account, like if you need to fund your account because there's not enough money in there, that's also not income coming in. So that's going to be an owner investment. And then the biggest one that people miss is when they're taking money out for an owner draw. So if you're thinking, I don't have enough money in my personal life, or I have money in my business account, I want to pay myself, and you just transfer that money over, which is the correct way to do it, especially if you're a very small business. But that is not an expense. So that won't be on your profit and loss. So all those little things are actually found on the balance sheet. And I'd say 95% of business owners don't understand how to read a balance sheet.
I don't.
Yeah.
And that's fine. I don't want to know. I just need to have somebody that's reading it for me. I'm in the home staging industry. That's my main business. And I also coach and train other people who are doing and aspiring to become home stagers, or just, helping them scale their business. And one of the major things that happen in our industry, and I think it's so for a lot of industries, how to price their services and make sure that it's profitable. Because I read a book, Profit First. Are you familiar with that book?
Yes.
And that is the premise that we used to think that you make money, you spend money, and then whatever is left is your profit. The thing is that I learned that really blew my mind in that book is that you can actually predetermine how much profit you want to make, and then structure your service, your pricing around that, versus the other way around where you make the money, you spend the money, what's left is yours. But now you can decide how much that is going to be before you even start. Can you touch a little bit about how people can use that principle to help them be more profitable?
Yes, there are a couple of principles in Profit First. The first one is like the envelope system, which is, I learned this actually as a kid, like you would put money into an envelope and you can't touch that. That is specifically for something very specific. And so Profit First says to open up several bank accounts so that you don't touch that money. I don't like opening up a lot of bank accounts. I only have 2, but I use that premise that every time I make money, I have a savings account in my business. I transfer it into my savings account and that money stays there and is not touched, and it's only for taxes. So that's like one of the premises of Profit First. But Profit First, what you were talking about, it's kind of like a reverse engineering of what you need to make in order to have a business that is profitable. And you do have to take into consideration what you need to make as a person to take home. So there's a couple of pieces. The first piece is figure out like what all of your expenses are at home. Maybe you need a budget, like your rent or your mortgage, your fuel costs, food, insurance, like everything, any credit cards that you owe money on, extra gifts, fund money, maybe some extra money they put into savings. Figure out what that is in a spreadsheet. Very easy. There are a lot of templates online to create a budget for your home. And for anybody that's starting a business, your home life and your business are so interconnected because your business is funding your personal life. So figure out what you need on that personal side. You're going to get a number, and that number might fluctuate. So just kind of average it out. And then in your business, figure out all of your expenses every single month. So it makes it a lot easier if you have an accounting software like QuickBooks or something else. So figure out what expenses you have every single month. Like, do you use contractors? Do you have to pay payments on a loan? Do you have insurance that you have to pay? Do you have taxes that you have to pay? So figure out what that average is per month. And that's how much money you have to bring in. So now that's your break-even point. You have your money from your home plus your expenses. You add that up. And now you kind of figure out like what services or products that you have and how is it priced currently? How much do you have to sell per month to break even? And I did that when I realized at one point, I was like second year, like 2.5 years in business. I thought, oh my gosh, I am so overwhelmed with work. I need to hire someone. And I looked at my numbers and I was like, oh my gosh, I can't afford to hire anyone. And that's one of the biggest mistakes people make is they hire someone when they feel they need them, not when they can afford them. And so I doubled my pricing. I literally just right off the bat doubled my pricing.
Yeah, I think that this is going to resonate with my listeners because often people are worried and afraid to increase their prices. And the thing is, people will level up. I increased my price and it just is what it is because otherwise you're not going to remain in business for too long if you're running at a loss.
That's a really good point. When you know your numbers, when you really understand, it helps you in selling or in creating the pricing because that's what you need. So it's hard for some people to say, I'm valuable enough that I deserve this. That's sometimes a really hard thing to do. But now you have the numbers in black and white that are telling you that's what you need to do. It doesn't matter what your competition is doing, and what you need for your personal life is completely subjective and personal also. So some people can survive on $2,500 a month. Some people need $25,000 a month. That is up to you.
Pricing is also about value, delivering
Yes.
value that is commensurate to what you're charging. So it's not just about this is how much I need to pay my bills. It also needs to make sense to the person that's paying me that money. My own thing is when you increase your prices, you are for sure going to lose some clientele. But then when you look at, for example, you're charging $100 for this thing, and now you decide that you want to charge $150. And then two people are not going to buy that thing, but the remaining people who are buying, it actually evens and balances out because now you're doing less work and you're earning more money, is the way I approach that. So I saw that one of the services that you offer is CFO, Chief Financial Officer. And when I hear those words, I think about boardroom, big time business, and I can afford that service. And this is a service that my husband has been telling me that I need. And I'm just like not fully understanding what it is. So can you break that down? Because after this, I'm going to be contacting you to consult you on this. I wanted to share this moment with my listeners because these are some of the things that go on behind the scenes in business on how we can actually make profit, because that is the bottom line. Unless you are a not-for-profit, how do we keep more money in our pockets and how do we project? So tell us in layman's terms on people who don't even know of, have never heard of CFO services, what is it and what does it do for a business owner?
Sure. And I'll start by saying that I truly believe in mentors, coaches, anybody that can get you from where you are now to where you want to be in the most direct way, because that is what they studied or that is what they know the most of. So I have coaches and mentors and a ton of reading, and just like you said, bringing the most value, that is something that is you need to always keep learning and keep improving. And one of those things you can do is when you hire someone to help you run your business. So a lot of people know coaches and such. A CFO is a little bit different. We are a fractional CFO, meaning we're not there every single day in your business working with you alongside in your office, because someone like that would cost about $250,000 in salary. So this brings you the details of some of the information that a CFO would give you without paying for a full-time person. So most businesses that are under $15 million in revenue can't afford a full-time CFO. So a fractional CFO is we make sure, first of all, that the accounting is on time and it's accurate, because that's the basis, that's the foundation of where we're getting our information. The accounting has to be correct. So it's like an in-house controller. So we make sure everything's correct and on time. Then we take that information out of your accounting software, whether it's QuickBooks or something else, and we build out more information, more reports, and graph things out so it makes more sense. So for instance, we can build out a forecast. So if you are at, let's say, $250,000 in revenue right now, and you want to get to $500,000 in revenue by the end of this year, and you tell us there's some seasonality and here are my services or my products, and then, here's some cost of goods sold, or here are my expenses, we can actually project out how many sales you need. What does that look like? What is the percentage? If you close 20% of your sales, how much you would actually get in revenue? And then how does that impact everything else in your business? So what else would be impacted? Maybe you need to hire someone, so payroll would be impacted. Maybe you need to purchase some more equipment. Maybe you need to, outsource some more things. So we project it all out into a forecast. So that gives us an opportunity to see, are you going to get in trouble in 3 months or 6 months down the line? And it gives you an opportunity to micro correct before something happens. And It also allows us to meet with you every single month. There's an accountability there. So like, okay, so have you reached out to all these people? Have you made these sales? If you haven't, what's going on? What needs to be tweaked? Is the person you hired, are they efficient and effective? If they're not, like, we need to come up with another strategy. Maybe they need more training. Maybe they need to be terminated. So there are a lot of things that we talk about of like, where is the forecast? Where are the actuals and the variance? We create budgets, forecasts, and then we graph things out so you can visually see where you're headed. So basically, it's just an opportunity to work with someone who really understands patterns and numbers and knows where things should be so that your profitability goes up, your revenue grows to where you want it to grow, and then you have enough cash in the bank. So a lot of people don't know how much cash they need to run a business.
Yes. This is all true, especially for creatives that I work with a lot. I'm a creative as well. And creative just want to create. They don't really care about all the things. And the business part is also important. And that's why I do this, to help people just focus and see where they're going, and to work with somebody like you who know the part that we don't know. And that it sounds to me then like the CFO service is kind of like creating a financial roadmap, looking back at where you are, and then creating a path for you to, if you have a vision of, I want to make 500K this year, I want to make 1 million this year. Well, these are the things you need to do. And this is what it's going to cost you to bring that in, right?
Yes. Okay. Exactly. And meeting every single month and reanalyzing and like micro correcting, which is really important, like pivoting every single month.
And then does that include also like profit optimization?
Yes.
Because the whole goal, that's what it's all about, right?
Yes. It's all about profit and cash in the bank, because you need enough profit in your business. So certain businesses, every business is going to be different. A product-based business is going to have a different profit percentage than a service-based business. And so we have thresholds where we're like, okay, so you're only making 5% profit. We want you to make a minimum of 20 to 25%. And so what do you need to do and what do you need to tweak? Which levers, basically? Is it sales? Is it pricing? Is your cost of goods sold? Is it maybe something else that you shouldn't be spending on? Like there's so many different things to tweak. So just the little tweaks every single month to get you, to that 25%. We would love every business to be 40% or more profitable, and that's possible.
Okay. Yeah. Okay. That was going to be my next question that you've already answered. So 40% on the average?
It depends. So a service-based business, so if you're not selling a product, we want to target 40 to 60% in profitability. Now, if you're an S Corp and you're on salary, we want to pull that out because it's profit plus your salary as the owner. If you're a product business, it's going to be different. So restaurant, if someone owns a restaurant here or a bakery shop or anything like that, because the cost of your cost of goods sold, the cost of the product is so much higher, your profitability is probably going to be closer to like 10 to 15%. And that's still considered really, really good. If you are selling a product like e-commerce, depending again on what that product is, we still want to see you at 20 to 30%. So it just depends. Every industry is a little bit different. And there's no reason why just because the industry is doing something that you can't be an anomaly.
And so thinking about the industry I'm in, for example, it's depending on the business model. My business model is quite capital intensive because we stock inventory, and inventory just meaning the furniture, decorations, and things that we use for staging. We take it to a house, we stage. When they are done, we bring it back. So we need a place to constantly store that. So that overhead is not going anywhere. And so what would you say in that industry? Would you say it's in the 20% to 25% profit margin?
It just depends, because what you're looking at is where is your gross profit and how much. So then you would probably need to sell a lot more, because your cost of goods sold and the inventory might not change that dramatically. And probably your operating costs won't change that dramatically. That means that your biggest trigger is going to be your revenue. So it just depends, right? Maybe your biggest trigger, for most businesses, their biggest trigger is actually payroll. So they hire a bunch of people. The people are not necessarily that effective, or they have too many people working for them and the revenue can't support the payroll that they have. That happens over and over again. I see that a lot. But I am seeing more and more also where there's a high cost of goods sold. That means that you either have to reduce that somehow, and if you can't, and sometimes you can't reduce the cost of goods sold, that just means that you have to either sell at a higher level on your revenue or sell more. Like you just have
Okay.
more clients, and that
So
cover all those costs.
either you do more volume, or
Mhm.
you increase your price to meet that demand. And you talked about something that I want you to talk more a little bit about. You mentioned depending on the kind of business you have, your S Corp receiving salary versus LLC. Can you tell us the difference? And the one that has, like, I don't want to say the best tax bracket or tax saving, but
Sure.
just touch on what the difference is between LLC and an S Corp. Because I actually had this discussion with friends recently. We were in a group discussion, and somebody was talking about they wanted to start a business and what kind of business should they register, S Corp or LLC. So I would like you to clarify and talk about at least two of those, if there is another one that you want to add on
Sure.
to it.
Yes, absolutely. And I love that subject because some CPAs won't agree with me, and I actually think they're wrong. So, and I'll tell you why.
Hello.
I'm not a CPA. So it doesn't make sense to become an S Corp unless your profit, your bottom line, is 60, 70, or 80,000 per year or more. And I'll tell you why. So the difference between an LLC and an S Corp is just the way you're taxed. So if you're making at least, $50,000, $60,000 a year in profit, it might make sense to become an S Corp. So if you become an S Corp, it reduces your self-employment tax. So 15.3% of your profit is taxed as self-employment tax. So when you're an LLC, you're double taxed. So you're taxed on your profit on the federal level, on the state level, and on the self-employment level, basically triple taxed. Not all states have a tax, but you're at least double taxed, right? So when you become an S Corp, it reduces that 15.3% self-employment tax. The problem and why it doesn't make sense to become an S Corp before you're at that level is because it's more expensive. So now you have two tax returns that you have to file. You have to file an S Corp tax return, and then you have to file your personal tax return. So that there's a cost to that. The second is that there are a lot more rules to becoming an S Corp. So if you're doing like a lot of personal expenses and your balance sheet is a mess and you don't have a good accounting system, you have to have an on the spot accurate balance sheet to be an S Corp. You don't have to as an LLC because it's just your profit that they're looking at. But when you're an S Corp, your balance sheet is actually part of the tax return. The third reason is in order to have the requirements of the IRS to become and stay an S Corp, you have to be on salary. So as an owner, and if you have multiple owners, they all have to be on salary. So you have to come up with a reasonable and customary salary. So if you're in a business that you're making less than 50,000 in profit, that's really hard to pay yourself any kind of salary because you'll be paying into payroll taxes, you'll be paying payroll fees, like payroll service fees. Even if you run it yourself, there's still a software that, there's a lot of costs with that. So it doesn't make sense to become an S Corp because of all the different fees. And it's not a one-to-one ratio where you're reducing all of that profit and you're not paying the 15.3%. Because when you're an S Corp and you're paying into your payroll taxes, you're still paying taxes. So it's not like a one-to-one where, oh, I'm not going to pay 15.3%. It's not exactly that because you're paying payroll taxes. So I would recommend that if someone's starting out, wait to see what your profit looks like. And you can wait till the end of the year because you can become an S Corp on a retroactive basis, usually at the beginning of the year. So if here we are in February, there's no rush. You can wait till, November, October, November, see what your profit is looking like, and then file a retroactive S Corp for the first of the year. And so you have a lot of options and it gives you time to make decisions. Once you're an S Corp, you want to make sure that you have that profitability every year going on because you have to be on payroll every year that you're on an S corp, and that's the biggest problem with becoming an S corp. And if you decide that an S corp isn't for me, and you become an LLC, and you get rid of the S corp, you can't file for an S corp and S election for another 5 years.
Mm.
So you can't make that decision lightly.
That is interesting. So what I'm hearing is for you to make determination to file as an S corp, and that is not your business how you register it. LLC can still be S corp, right? That's what I'm understanding. And in order to do that, you should have like a short history of what your revenue looks like before you elect to file as an S corp, because you need to be at a certain bracket of profitability. And so it's not something that you can determine right from the get-go, like I'm starting my business and I'm being an S corp.
Yeah, I've seen CPAs tell people to file as an S corp immediately, and then they're in trouble. They can't pay payroll. They don't have enough profitability. They're paying all these extra taxes. They're paying all these extra fees for these extra tax returns, and it's really, really hard. We became an S corp so we started the business in 2019. We became an S corp in 2021, retroactively. So we were already at over 300,000 in revenue before we even considered it. So you don't have to be in a rush. It's not saving you that much money, but it is a more intense designation where you have to make sure your accounting is on target, and you have to file these extra tax returns. And you had mentioned also, so the LLC is a legal designation. So an LLC protects your personal assets. And I can't give you legal advice, but it protects your personal assets from your business in case someone sues you. But an S corp is a tax designation. So you have to be an LLC first before you can file as an S corp. But there are businesses and sole proprietors out there that never even become an LLC. They're just a sole proprietor, and that's fine too.
Yeah, but then that is the big risk. Again, we're not talking legalities here, but the big difference with the LLC and sole proprietorship, from my understanding, from the layman's point of view, I am not a tax or finance expert, is that LLC has the biggest protection for you as the owner. It separates your business completely from your personal assets. If you were to get like sued or get in trouble or owe money or whatever, then they can only come after you as much as your business has, not getting into your personal things. That's where I understand it.
Yes. Especially if you're going to be traveling to someone's property, if you have like other people working for you, if you're, I don't know, painting someone's house, or like you guys go into another location, you're staging. If someone gets hurt and trips over something that you do and sues you, it's not worth it to not be an LLC. It doesn't cost that much money. You can do it pretty easily online. And I think it's like $300 to become an LLC. It's worth the protection.
Yeah, I started out as a sole proprietorship when I first registered my business and launched. And then that, I think, was 1 year down the line that I switched it to an LLC from just that point of view, from the advice that I got. So good. I didn't know that talking numbers could be so interesting because you're breaking it down so easily. And on the flip side, when we talk about like cash flow, how do you even broach that? Like we've been talking about the projection of how much you would need and how much money you would need to make to have that money. Cash flow is always a big issue. Like, do you focus on cash flow or do you focus on the profitability? What is your advice when it comes to cash flow for businesses?
Yeah, that's a really good question. I would focus first on profitability, but then I would start building up cash. So when I started, I had no money. I wasn't making any money. When you start a business, you're going to work possibly, maybe some people are smarter or do it better. I worked more than I ever had in my entire life and made less than I ever had in my entire life for quite a while. And so that is not unusual. Don't give up. But what I did, because I needed to pay bills and I had credit card debt, and you want to make sure you have money in the business, I opened up in my business, I had my checking account and a savings account. And in my personal life, I had 2 checking accounts and a savings account. The reason I did it that way is kind of like a profit first envelope theory. So every time someone paid me, I put money, hit my business checking. I would take a portion of that money and put it into my savings. I strive to take 30% off the gross that comes in to put into my savings account. It doesn't always happen that way. And when you're starting out, you won't have enough. So when I was starting out, I put $10 in. So anytime anybody paid me anything, I just moved $10 over. It's a great habit to start saving. And then the point is that you don't move over too much because you don't want to have to dive into that money, right? You want to keep it there and save it there. And that money is only for sending to yourself as, as extra money or profit, and keeping in the business to reinvest in the business, like buy something that you need and to pay taxes. So you want that to grow. In my personal life, I had 2 checking accounts, like I mentioned. One checking account was like everyday stuff. The other account I opened up for the big item I had to pay, which was either mortgage or rent. So I would always, as soon as I got paid in my business account, I would, so for instance, if my mortgage was $2,000, I'd transfer over $2,500. So every month I had a little bit extra that would build up. So it doesn't have to be big things. So everybody thinks that, oh, it's so easy to be a millionaire. Well, millions of dollars start out with dollars. It's just little tiny things that you do every single day consistently. And so saving consistently just a little bit and not touching that and letting that build over time is what's really important. Now, of course, it's going to be depleted when you pay taxes, but then you keep building it up. And so I came into this whole process of you want 3 to 6 months of expenses in your business account, and you probably want 3 to 6 months of your expenses in your personal account. That seems like a lot, but if you could even get it to 3 months, you would be like 90% ahead of the majority of the population.
This is true. This is true. And I learned that the hard way too. And now I strive to do the envelope thing. And it's funny because now that you say it, that's what my dad used to do. My dad had literally like envelopes in his wardrobe where he would put money for this and money for that. And he would tell you, go to the grocery envelope or go to your lunch money envelope and take what you need. And that was what he did. He would get his money and then he would just divvy it up like that. And so it makes a lot of sense. One more thing is that I recently talked to a friend of mine, interviewed on the podcast. I think it was episode 4. She sold her business. So we were talking about what were the things that she learned in that process. And I want you, as an accounting expert, to kind of speak to, if somebody has a business today, what do they need to do from the numbers standpoint to scale the business in a way that is going to be sellable and transferable? What are the things that a person is looking for, financials, when it comes to finances on a business that they want to buy, and how do we build that up?
That's one of my favorite questions. There's a fantastic book by John Warrillow called Built to Sell. Really easy
to write that down.
Yeah, I recommend that to everybody. He also wrote The Art of Selling Your Business. So there are a couple of things, and we do business valuations. So I can literally see, as I tweak things in the valuation, what has the biggest impact, which is fascinating. So the biggest impact for any business is, first of all, it needs to be transferable. So if someone were to buy your business today and you would technically leave, what would happen? So would it fall apart without you? So what you need to do to buy a sellable asset is to start determining, like you were saying, who, not how. Start determining who you need in the different positions so that you're not in the business, in the daily activities and the daily operations of the business. So that's the biggest piece. So your business is not sellable if your business is you. So like if you have a brand and the brand is 100% about you, you need to start thinking about, how can I make this an asset where maybe the brand is still me, but everybody knows how to do exactly what I'm doing. And I have like clones of me in the business, because you can do that, right? The second piece is recurring revenue. or any kind of revenue stream that keeps building on itself or keeps growing. So when you're selling your business, they'll take your financials and they'll look between from 2 to 5 years going back. And what they're looking for is, what did the revenue look like? Is it seasonal? Has it been building over time? Every year, have you been growing? Is there any part of the business or the revenue that's recurring, like a subscription basis? So the more your business grows year over year, the faster, the more momentum you have, that increases the value of your business. The subscription basis also increases the value of the business because that's kind of just recurring revenue. No one has to do anything for it. You don't start from zero every month. And then the profitability is very important. So most businesses, their value is based on how profitable you are. So you have to make sure that if you have your owner's salary in there or any other owner perks like your cell phone, your internet service, maybe you pay for some licenses. So any of that, you want to take that out so that improves the profit, because that's it. Like, so, if someone else was to run the business, they're not going to have those expenses. So those are the kinds of things, like you can't be running the business. Someone else has to be able to. The revenue has to keep improving and increasing. The bottom line, the profitability should be improving and increasing. And if you can have some kind of subscription, recurring revenue, that makes it even more advantageous.
That is good. But think about a business like mine. We don't have like subscription basis or online anything.
Yes.
But we do have repeat clients. Does that count?
It does, because they'll want to buy your client list. And especially if you have your sales and marketing. So if you have a way to be able to prospect, generate leads and close a specific number of leads on a regular basis, like say you close 1 or 2 new leads a month, or maybe it's 20 new leads a month. But if you're closing new business on a regular basis, that will significantly improve your business. So if you've got like ads running or marketing or something that's working well, that's very sellable.
That is wonderful. And I could talk to you on, and I didn't even realize that I could enjoy talking about numbers and stuff so much. But just before I let you go, I would like you to just recap real quick. What are the things that, let's say, top 3, top whatever, that they need to do before they even start?
The first thing is to figure out what in your life you don't have to do. And you'll be surprised. So for instance, I gave up cleaning my house. I hired, as soon as I was able to close a few clients and I kind of saw that this was going to, go somewhere, I hired a cleaning service and I hired someone to mow the lawn, because in the time that it would have taken me to clean the house or mow the lawn, I could have closed a client that made me $6,000 or more, right? Your time is now valuable in a different way. So hire some help or get rid of things to create some bandwidth. It might also mean not cooking and you DoorDash, or you get a meal prep service. That might come down the line because all those things are a little bit expensive too. But make some bandwidth. You might have to give up some things that you enjoy doing. You're probably going to have to give up your Netflix, and you're probably going to have to give up, going out with friends if you're really, really serious about it. So like there's a sacrifice, but the sacrifice and the consistency is worth it. The second thing is you do have to understand your numbers. Open up that separate bank account. Make sure everything business is in that account and everything personal is in your personal account. Do not mix. And then make sure you have some kind of software, accounting software. I recommend QuickBooks Online. I feel like QuickBooks, there's a self-employed that you would scale out of that really quickly. I don't like FreshBooks, Wave, Xero, any of those other ones. If you're going to build a business, you'll outgrow them. The only one that's probably large enough and very powerful and still inexpensive is QuickBooks. And having really solid financials and a good technical, streamlined, like a good QuickBooks actually adds value to your business as well if you're going to sell it. Have your QuickBooks so that you know what's happening in your business. So the third thing is sales and marketing. Figure out your pricing, figure out your customer or client avatar, and do not rest until you are talking to every single person. Leave no stone unturned, because the one thing that can fix any bad business is sales. You can do everything wrong, but if you can sell, it doesn't matter.
This has been very, very insightful. And I am inspired by you. You started this from nothing, not being in bookkeeping, accounting. You learned what you needed to know and you turned this into a thriving business. And this is what this podcast is all about. So thank you for sharing your journey and for giving us all those nuggets of advice. There are so many of them that I will definitely be taking into account when it comes to my business, and I will be in touch with you.
Thank you so much, Shoke, for having me. It was great.
I love your story. Thank you for sharing. You've been listening to the Creative Business Mindset podcast. Remember to share, like, and subscribe. Thank you for listening and keep doing all the things. Until next time.